Everything is impossible until it's not. Mark Spiegel, God bless his soul, once projected back in 2014 why projections for Tesla to sell 500,000 cars in 2020 are absurd. Boy, was he wrong. Tesla went on to sell just short of 500,000 cars, 499,647 in 2020. His reasoning for why that was absurd, because Tesla was on pace to sell 35,000 cars in 2014, meaning 500,000 sales in 2020 would imply a 6-year compound annual growth rate of 56%. Unfathomable. He makes a comparison to Microsoft, a fantastic business. They couldn't grow 56% a year. To put this in perspective, he writes, Microsoft, a software company and thus a business with no issues in scaling production, first broke $3 billion in sales in fiscal year 1993, generating $3.7 billion in revenue. 6 years later, Microsoft did $19.7 billion in revenue, which was a compound annual growth rate of 32.1%. Microsoft, a fantastic company, could not grow 56% a year. Therefore, it is impossible. Is there a problem with this line of thinking? So it is pretty incredible to have a 6-year compound annual growth rate of 56%. Mr. Spiegel couldn't have possibly seen that coming. But today, we're still facing the same bear arguments. People still think there's no way Tesla can keep growing 50%. And I ask the question, why not? I think Tesla's already done the hard work. If anything, this period here from 2012 to 2020 was the hardest period in this company's existence, where they were constantly trying to stave off bankruptcy, defying all expectations. They said it was impossible to even make a profitable electric vehicle company. They proved those people wrong too. So now in 2023, Tesla is on pace to sell 1.8 to 2 million cars they're projecting. So that would just about continue their 50% compound annual growth rate. They sold a little over 1.3 million in 2022. Why do so many have such a hard time seeing the writing on the wall? And how do they continue to be wrong? And how do they continue to get the spotlight? Now they're saying Tesla 50% growth is impossible because competition is here. What competition? I've been hearing this argument for years. Let's look at General Motors, their competition, whose vehicle sales have been on a steady decline since 2016, where they peaked for the last decade. They sold 10 million vehicles. And then each year from there, they've been declining. 9.6, 8.3, 7.7. And in the most recent years, 2020, obviously there were a lot of issues, but Tesla managed to grow. 2020, 6.8 million sales. 2021, 6.2 million sales. This is Tesla's competition people are worried about. A company who's declining in sales, and those are gas cars. They can't even make a profit selling their electric vehicles. They still haven't figured that out. So not to mention, every electric vehicle they sell is one less gas car they sell. They're cash cow business. How are they going to make this transition? It's going to take time, and they're going to lose money while they do it on the electric vehicles. And then if we go to 2022, we see Tesla and GM, I'll give them credit. Tesla grew 44% compared to the prior year, 2021 to 2022. Tesla grew 44% in 2022. General Motors grew 3%. Every single other automaker, major legacy automaker, their sales declined. U.S. light vehicle sales, BMW down 1%, Ford down 2%, Subaru down 5%. It goes all the way down to Honda down a whopping 33%. Tesla's competition is here, all right. So that brings me to my point. Tesla and the coup de grace. Now, I believe Tesla's latest price cuts are a coup de grace. In the past, Tim over from Oracle Investments, discussed thinking maybe 2025 would be that pivotal year that really makes or breaks the auto industry and how, this shakeup is going to occur, how dominant Tesla will really be. But now I think that year has been moved up to 2023 thanks to Tesla's latest move. They smell blood in the water, and they are going for the kill shot. Under these latest price cuts, Tesla reiterated in their earnings call that with these massive price cuts, they intend to keep margins above 20%. They think it'll still be possible to have profit margins above 20% They think it'll still be possible for their operating margins to be above 20%. Now, in comparison, a lot of these other competitors, they're lucky if they're making maybe 5% margins. In many cases, they're actually losing money, and they make their money off the financing of these vehicles when you do 10-year, payment plans. So the Model 3 price now starts at $43,990. Now, the average sale price of a new light vehicle in the US in 2021 was $42,380, just under, but that's gas vehicles. Now, additionally, with the IRA, the federal tax credit, the Model 3 is eligible for a $7,500 rebate. Now, I did a poll on Twitter since I myself don't have a Tesla yet. I will get one soon, but for now, just buying Tesla shares, as many as I can. So here's one owner's reply, and you could check out, hundreds of people replied. It really depends on how much you're driving, but there was a common theme, tons of money saved. So this one chap saved $5,000 in 1 year on gas. That's after taking into account how much he spent on electricity. Still saved $5,000. So now, if we look at the Model 3 price, Model 3, from a starting price of $43,990, comes down to around $30,000. For comparison, a Toyota Camry has a starting price of about $26,000, but it also runs on dead dinosaurs and carries a whole lot more maintenance costs. Now, Tesla's the only company to also offer full autonomy with full self-driving. We'll talk about that another day. Very controversial topic, but it's getting better. There's no denying that. So what exactly is there to be bearish about Tesla? Is it overvalued? Let's take a look. If we look at some fair PE ratios based on their EPS, for 2022, Tesla's EPS came in at $3 and change. For 2023, some projections are around $5, $5.50. So $5 of EPS, if we were to assign Tesla a 40x multiple, 40 PE ratio, that means the stock price fair value would be around $200. Now, if the market, this is where it all depends on the macro and what PE the market wants to assign Tesla. The market could assign Tesla 20 PE if it's really feeling irrational, but it's hard to justify giving it a 20 PE if they continue to have a compound annual growth rate of 56% or 50% or even 40%, whatever it is. So I think this is a low ball. If Tesla brings in $5 of revenue, $5 of EPS in 2023, 40x multiple, stock price of $200. Push that up to a 50x multiple, $250. If we get crazy, we go back to the moon. If the macro improves, if rates start to come down, maybe Tesla can get a 70 PE. And then just at $5 of earnings, it's at $350 a share, double from where it is right now. Stock price is purely dependent on the macro and whatever other nonsense in the short term, but I just like to do this exercise to get a long-term idea of where things are and what's a fair price to pay for Tesla. So these numbers are reassuring to me because I think Tesla can grow 40%, maybe 50%. So Tesla's been having high growth. People have been saying for the last 10 years it's impossible. They continue to do it. Why are they going to stop now? Now is the easy part. All they have to do is rinse and repeat. They got the factories built. They have 4 factories that have capacity to do millions and millions of cars. They don't even need to build new factories. Their capital expenditures should come down as these factories fully ramp up. All their pieces are on the board, they're in play, and they're in position to checkmate the enemy. I mean, seriously, they really don't have to do much in 2023. Like I said, they've done the hard part. To ramp the production of cars now, you can kind of argue this is probably the easiest point in Tesla's history. Right? And I'm not saying we should get complacent here, but I'm just saying, realistically, all they have to do is things they've already done, and they've shown that they learn and they continuously improve because they're an agile company. So I just don't see how 2023 is any different than 2022 and 2021 and 2020. In fact, a lot of the problems they faced are gone. There was a lot of supply chain issues. There was lots of problems, and they were able to, through it all, still grow tremendous rates. So where do we go from here? So that's the cars. That's all Tesla is, right? Wrong. Where do we go from here? Here's a little chart I love from Dave Lee. I added the little "you are here" arrow. You are here. The EVs, the electric vehicle ramp, has just started. Tesla is riding multiple S-curves here, and we're really at the beginning, I believe. We've got a long way to go until EVs become a mature business. We've still got potential for full self-driving and maybe even a robotaxi fleet. The full self-driving, like I said, there's no denying it's getting better every day. The energy segment of Tesla, which probably will end up being bigger than the auto segment. And then, of course, we've got the whole artificial intelligence and robots segment that they've started working on. Humanoid robots, all kinds of crazy things happening under the hood over at Tesla. So I think we're still early here. Like I said, everyone says it's impossible. Everyone always says whatever has not been done is impossible until someone goes out and does it. Maybe humans are just wired to be stupid. I don't know. It would be interesting to get some reasoning on this. Please chime in the comments below. Why do people have such a hard time believing something can be done that's never been done before? I mean, do we need to see visual proof? And then we can say, oh, well, that's obvious. Every step of the way, they've said it's impossible, and Tesla has shown them that they're wrong. So I think this is just the beginning. I think Tesla is still in its first inning. We've got 8 more to go, probably even extra innings. That's a baseball reference for you Gen Zers. Now, my favorite time of the year coming up, the Super Bowl effect. Last year, when all those auto companies pay insane amounts of money, millions and millions of dollars for 30-second little ad spots. And what was the effect? All those electric vehicle advertisements you saw last year. You probably don't know this, but Tesla doesn't pay to advertise. They don't have to. The product sells itself. What happened? Tesla's vehicle orders spiked post Super Bowl. And I'm sure that this is going to happen again this year, 2023. You'll have to tune back in. We'll have to wait and see if it does come to fruition. So I've never been more excited for what the future has in store for Tesla. If you enjoyed this video and want more, you can find more of my thoughts and my Substack article here linked in the description below.